Hello, I'm Dale Gillham.
And I'm Janine Cox, and welcome to our video on what to expect in the Australian share market in 2018.
Now today we're going to be covering the All Ordinaries Index, what movements we're expecting for the year. We're also going to take a closer look at the different sectors that we believe will have some interesting movements in the coming year. We're going to talk about the Dow Jones, the Australian dollar, amongst other things. So let's get straight into the All Ordinaries Index, Janine.
Okay, and looking at the All Ordinaries Index, you can see there that the market has pulled back this week. I've been expecting, Dale, for the market to come back between 6,000 and 6,100 points, and it's been hovering just above that zone and looking like it's finding support there. But we could see the market come back a bit further than that, given the strength of the pullback that we've already seen so far this week. But more medium term, we're expecting the market could rise into February, March this year. I think I may have mentioned in the last report, and possibly April, May, because the market was quite buoyant into the end of the last year. And typically that can occur where we see the market move on and push up into the first half of the year. But we've always got to be prepared for the unexpected. So at the same time, we're looking at what the downside risk is on the market if it were to pull back further than that.
Yeah, I mean, to me, the critical point is mid-March, roughly, because we're either going to be rising up or falling down to around mid-March, and then it should turn from that point of view. So, but we are searching for the yearly high, aren't we? So you're expecting that probably, May, April, May?
Well,
around there?
I'd like to see it April, May, but it could be February, March, and that all depends on how the market receives what comes out in reporting season. We have seen a pretty buoyant US market with their reporting season so far at the start of the year, which has helped our market hold up as well, but the volatility over there is going to have an impact on our market, as we know but our market unfolds very differently to their market, and as you know, we haven't even achieved the all-time high yet, so we're still waiting for that to unfold.
Well, we're not. I mean, a lot of Asian markets, except the Hang Seng, I think, is just
gone through
its all-time high. But the rest, now with the Australian share market, I know we're searching for the yearly high, but we're also looking for the yearly low in the second half of this year, which is likely to happen between like June and November. But probably my guess will be October, November. Could be possibly be September. But right now, how much upside do you think we've got on this? Because obviously we're still going to go up from March to the high of when that's in April, May.
Well, I'd like to see the market push up to 6,350, possibly 6,450, and then we've still got the there's another level above that which I haven't shown on the chart there. So look, there's a potential for it to hit that upper line that I've shown on the chart there.
So that's 6,400 there.
That's 6,400. Yeah. So we'll know over the next coming few weeks whether that's likely to do that or not.
Yeah, and that's whether it's rising up through to that between now and March.
Because we've got to bear in mind that we're expecting also not just the 1 year peak for the market, but also the 2 year peak. So the market often peaks every 2 to 3 years. Now, a buoyant mining sector could push that out. We are aware of that, and that's why we're really watching that sector closely at the moment.
Absolutely. So basically what we're saying is don't expect a new all-time high this year.
I don't think that we'll see a new all-time high this year, but if we do, it'll be in the second half of 2018.
Yeah, and that's what we're sort of looking at. So let's now go and have a look at some of the sectors as well. I know we're going to talk about the mining, the banking sector as we go along here anyway, but let's go and have a look at some of the sectors first, just to show you where the opportunities might be lying. So right now, the All Ords is, we believe, bullish to April, May-ish for its all-time high. In the second half year, we'll have a yearly low. Now, that low is probably only going to be It'd probably pull back 12 to 15% in that sort of range.
Yeah, generally we expect that. I mean, we can see, I'm expecting a bit of a pullback now, especially, we'll talk about the US market in a minute, but in the order of anything between 7 and 5.5%. But what's typical is, like you say, 10 to 15% is quite normal for the market at any time. And the bigger correction that we're looking for at some stage this year would be in the order of around 20%.
Cool. So now let's go into some of the sectors. So we'll just quickly go through some of the sectors. Now on the screen now you'll be seeing the consumer discretionary sector that we've got. So let's have a quick look at that. I'll just
before we talk about that a little bit further, with the market, the good thing about any of these corrections is that it's about being prepared for it, not only for the correction itself when it comes, but also for the opportunities that follow after that.
Oh, absolutely. And that's where the thing is, it's, especially like we're talking about the Dow in a minute, but a lot of people will go into a market when it's overrun. And, really we're getting a lot more talk about people going, I want to invest in the Dow right now. But as Buffett says, buying doom, selling boom. And the US market's been making new all-time highs for 4 years. So it's definitely in that boom phase. So now's to look for the undervalued markets, which is more the Asian markets right now. Because as we said just a minute ago, it's only the Hang Seng that's just finally broken to its all-time high. The Australian and other Asian markets are still below their all-time high, so there's more opportunities there than what there is in the US at this point in time.
And all the there's a lot of boxes being ticked at the moment. I mean, the NAB business survey's come out and has said that things are much more positive here now. We've seen a much better festive season for the retail side. It wasn't what they were hoping for, but it was better than what it could have been. I mean, because there was so much negativity over the last couple of years about the retail side of things. So it's good to see that things are improving here in Australia, I think.
Yeah, well, we've had, I know for myself, like looking at the inquiries we're getting at the moment, the inquiries are going through the roof for our courses and enrolments. And so to me, and there's a whole lot of people that came to us, 6, 7, 8, 9, 10 years ago that inquired back then that had done nothing in the meantime, or they may have been watching YouTube videos and pretending that they were going to learn how to be a trader from YouTube. Now, I'm not sure about you, but YouTube's great for getting a stain out of your shirt and baking a cake, but not learning how to trade. But they're all coming back now and going, okay, now I need to learn how to do this properly.
A structured approach.
Which tells me that the market now is much more, or the psychology in the market is much more relaxed about where the market's going, and it is more bullish. And to me, that's a really, really nice sign. And we've settled down a lot over the last year or two. We're not as volatile.
Well, in the last report we talked about the different phases of the market. And
Correct,
it's really starting to show all the things that we've been saying for the last few years, and we talk about it at our workshops. We said that the market was in this particular improved earnings phase, and that's what's been coming through.
Yeah, well, if you haven't seen the 2008-17 wrap, which is that we did that in 2 parts, go back onto the YouTube channel and you'll see 2017. We've done part 1 and part 2. So go and have a look at that and you'll see that chart that Janine's actually talking about. So do you want to get in the sectors now?
Yeah, look, I mean, last report we talked about this a little bit, and how that the consumer discretionary sectors had a bit of upside, and we've seen it hit one of the levels I was looking for. So you'll see that 9% level that I've marked there. That was what we were looking at many months ago, and it's actually traded to that level last month.
Yeah, which is a high of 2382.6, as you can see on the screen right now.
Yeah, but that whole move from, because we didn't go into a lot of detail last time, but that whole move through 2016 and 2017 is really a sideways move supported by the trend. You can see my trend line on the chart there. And so therefore there is the potential for it to continue to rise up to that next line at 2,540. And I've got the date that we talked about last time, about around April 18, as a potential for a turning point on the market. And that could be sort of fitting with what we're thinking for the whole market.
Absolutely. And that's where we're looking at for that more peak in this area. Because obviously with the market, something's got to turn for it to create a peak.
Yeah.
So what was rising has got to start falling for the market to turn.
But it's a nice steady
down.
rise. It's not an acceleration yet. We haven't seen that. And that's typically what you expect to see where there's a top. So those sorts of signs you can be watching out for on some of the sectors, and it makes it simpler by looking at the sectors to see what's going on in a much broader sense, but also have an awareness about the stocks that dominate those sectors, and how there could be stocks in the rest of the sector that could be doing something quite different.
Now we're going to have a look at the energy sector, because that's actually quite an interesting sector at the moment, isn't it? It has been, because it's one of the ones that have been moving of late. And so you'll see on your chart now, and I'll just expand it up for you just to have a bit of a look better.
Shall we just talk about 4 or 5? Is that what we?
Yeah, that's fine. That's fine. We'll talk about it.
Because energy is a good one, and I'm glad that you picked that one. And we did touch on this last time, as in terms of how far we're expecting it to run. It has actually pushed past the November 17 turn date that I had for it. Shows a lot of buoyancy there in the sector.
That's that vertical line right there that I've got my pointer on. So that's that one there.
But there's still the potential with energy. If you look at a lot of the energy stocks, they might be having a little bit of a breather at the moment. But there's still and it's at that level that I've marked 11,000 on the sector. But there's still, even if we have a short-term dip in the sector, there's still the potential for further upside into the second half of the year in this area. But I'd be just watching it really closely. If you haven't ventured into this area of the market, just be a bit more cautious in terms of your entry on some of these stocks, because they are quite volatile in this area.
Well, they are. I mean, we're talking about gas and oil and those sorts of stocks. So they're also going to be affected by the Aussie-US dollar, which we're going to have a look at anyway.
I actually had a student email me through the support service this week who did some fantastic work in overlaying the energy sector chart with oil and with other stocks in the sector, so that she could understand how it moved in relation to the sector, having watched many of our recordings and talking to us through the support service. And I think that she's got a huge benefit out of doing that because it's helped her broaden her thinking about the stock.
Well, it was, because what's the catalyst for a move? And that's what's causing a move.
Because you can understand then whether is it the whole sector that turns before the stock, or is it that stock dominating the sector, or is oil having the biggest influence, and is that turning first or before? It's really good to understand those.
Well, and the energy sector is made up of a couple of different types of companies, being oil, gas.
Yeah.
And obviously we were getting into alternative energies and those sorts of things as well. So whilst those companies are still pretty small compared to the other ones, what sort of stocks are you looking at here that are leading this sort of sector?
Well, look, I always like to look at the bigger stocks. So Woodside is one of the stocks that I like in this sector. But stocks like Santos also is another one that's been quite strong. A lot more can be a lot more risky, although it's had a steady trend. But if you're looking to try to get into some of those stocks after they've run, you have to have done the broader analysis of the stock. And what I mean by that is we're showing you a monthly chart of the energy sector. Well, the process is to start on the bigger time frame, and that's what a lot of traders do. Is they make the mistake, and you've always said this in your training, is that they make the mistake of looking at short time frames, because that's what the industry talks about, daily movements. And a lot of the old teachings, when Dale and I were looking at all the old teachings many years ago, it was all on the daily charts. But start on a monthly chart and you'll often find a better way to trade a stock. And I was only speaking to someone yesterday who was looking to trade the top 20 shares on the market. And he was finding that he could have some really good strategies on the medium to longer term that would get better results than the shorter term.
Oh, look, yeah, and every day I'm fielding phone calls from people that want to learn, but their comments to me are, look, I want to be a day trader. And I go, but why? Or why are you looking at that? And then they're saying, because I want to make some money, but they have this, they don't know what they don't know. And they also don't know what questions to ask. And so the comments they make quite often come from an ignorance, thinking more, I've got to look at daily charts and I've got to day trade to make money. And yet, from our perspective, it's exactly the opposite, is because, and when I say to them, the industry wants you to trade a lot because that's how the industry makes more money from you in brokerage and everything else. So, and going to YouTube and going and getting, education from your brokers is only going to teach you to be more broke.
But the beautiful thing is that, and this is another thing you've always said, you don't have to believe me, because you can go and look at the chart and prove it to yourself.
Yeah, absolutely. And that's what we're talking about here, is have some really good strategies, but don't go with the rest of the market, because the statistics are out there that 90% of traders fail, and it's because they don't get a good education, but they also follow the herd, and you don't want to do that. That behavioural finance, in terms of those heuristics that come through, is you get sucked into this belief, and that belief then takes you down the wrong track in terms of trading. And looking at the bigger picture like we're doing here shows you where the opportunities are, and then you can bring it down into, like, the energy sector, which is a great sector at the moment. We're still thinking it's going up. But look at what some of the stocks in that are lagging the rest of them. Some of them are leading that sector and some of them are lagging. But look at the ones that are lagging a little bit, because they all catch up to the other ones. And it's generally that swings and roundabouts that happen. So let's look at the next sector.
Financials, I think that's really worth having a look at the moment, given what's happening with the banks and the Royal Commission that's going on at the moment.
Well, the banks have been, all the big four banks had their last major high back in 2015. And so, to me, this is an interesting sector at the moment with the Royal Commission going on. What's going to happen with that? Where are they going to be in the next 12 months, 2 years? Because the Royal Commission results come out, about February next year?
Yeah, and you can only think that the public are going to have a lot more confidence in the whole industry after this is done. I mean, in theory, a lot more processes, procedures and a lot more compliance will be in place. And while that does create costs for the banks, I think we wrote a report, or I think you might have written it in your market wrap, about CBA and the level of earnings that CBA has, and the costs that they may have to wear on their bottom line versus what they're bringing in. And that's only going to be a small,
it's a blip, isn't it? It's
isn't
just a blip, isn't it? It's like, I mean, Commonwealth Bank has made all-time record profits back in what was announced late last year, October, November, something, wasn't it?
But it's pessimism about the banking sector that's causing this more than what I think is some sort of substantial impact to the bank's bottom line. So if the banks wanted a reason to write off things during this period that they want, clever accounting, then they may do, and that may have a reasonable impact. But I just think that there's potential upside in the sector. For our market to make new all-time highs, the sector has to rise. That's just the reality of it.
But that's where I think, because it's going sideways, I mean, we're seeing here the last several months it's just been going sideways, obviously, because of the Royal Commission.
Yeah.
There's not a lot of excitement in there. I don't think there's going to be a lot of speculation in there because of the Royal Commission.
But that's where you sometimes get, you could get a bit more of a sell-off if something came out of the box that people weren't expecting. But then, and I think that there's a lot of, hedge funds that are probably circling the sharks, if you like, circling in the waters, looking for that sort of thing, opportunity. But then there's the other side too, where you can get the bounce back where everybody realises this is not going to be as big as what they were talking about. And let's face it, if you look back in history at all the things that they said were going to be a catastrophe and what happened to the market and how it reversed strongly afterwards, hindsight's a wonderful thing, isn't it? But if you're listening to the wrong information, then that can cause you to be inactive and not make good decisions.
Well, I think in summary what we're saying at the moment is you're going to be collecting dividends on the bank this year rather than too much growth. And when the banks start to move again, then the market will move through to a new all-time high, which is...
I mean, we've seen scenarios where there's been information come out about some of the banks and then their share prices have gone up when the market realises that there is further upside there. So it'll be interesting to see what the banks come out with when they report this year.
And all-time record profits means the market, when the stock's it'll start to fall away, and we see that quite often as well. And we've seen it on Combank, and we've also seen it on Qantas. It's come back after its all-time record profit announcement, and it came back as well. Often investors think, I've got to get into it now because it's all-time record profits, but you're buying in too late. You want to be in before they do that, and that's where you're going to get the share price carrying on. So right now, financials not too much in opportunities, but if you do hold them in your portfolio, don't expect too much growth out of them. But I don't think there's going to be downside on them anything to be worried about.
It's so small, and if there is upside, then it's about having your rules ready and just watching for those important levels on some of the stocks. Which there's some really strong levels on some of the banks, even the second-tier banks out there.